Hello, everyone. Mike Riley back again with you today, and I'm going to answer some questions about underwriting. I do a lot of insurance in my business, and in many cases, it's a confusing thing for people to go through the process of underwriting. And I want to assure you, if you're thinking about insurance or if you've recently gone through it, that the underwriting process is all about trying to understand what we call risk. That is, the insurance company wants to know what's the risk that you are going to die too soon if it's a life insurance policy, or if you're going to become sick or disabled and make a claim on critical illness or disability insurance. Please be assured that none of the questions are personal in that there's a judgment. The insurance company doesn't know who you are, and they're not passing judgment on what they think about you. And they're really looking at three main areas of risk. And the first is lifestyle. So, are you a healthy person? And some of the biggest factors that go into that are smoking. So if you're a smoker, you have a higher risk of dying too soon or becoming sick because we all know that smoking has a direct link to cancer. Alcohol consumption is another factor. So if you drink too much, um, that can be an issue, as well as any other lifestyle issues like speeding tickets or infractions with the law, drug use, and then of course your height and weight. So there's a certain range of healthy size that you should be, and if you're not tall enough for the mass that you have, that's also an indication that you may be higher risk for claim. So those things all come together on the lifestyle. There is a financial risk component which often surprises people, and that is does the insurance that's being asked for, is there an insurable need that the individual has? And really that just comes down to, are you really worth what you're asking for? So the main areas that come into are our income and net worth. So that really means that if someone who earns $15,000 a year is asking for $100,000 of disability coverage, that doesn't really match up there. And in the same respect that someone who has a net worth of $20,000 and is asking for $4 million of life insurance, there's going to be a bit of a concern there that that person is now overinsured. And you may be surprised to know that insurance companies do not like to overinsure, that is, issue too much life insurance or illness or injury insurance for someone. They want to keep it within a certain framework of risk. And finally, on this side, it's basically health. So your particular health history and your immediate family's health history. An immediate family means your father, mother, brother, or sister. And I'll come back to that in a minute. But your immediate health, have you had any concerns or issues with cancer, with anything with your respiratory tracts, your gastrointestinal system, your skin, your liver, eyes, ears, nose, or throat? Are you a healthy person? Um, and you can actually have some health concerns in the past for some things and still be considered a standard issue. The real concern for an insurance company generally is if you have a combination of things, or if it's something that is severe, like cancer, for instance. If you've had cancer within the last 5 years, for most policies, you can't get insurance. But in many cases, if you've been healthy for more than 5 years, you may be considered for insurance coverage. So that's your personal health and family health. What's interesting about immediate family health is that most of the questions will deal with, did your parents or brothers or sisters contract any illnesses or diseases prior to age 65 or prior to age 70, or did they die prior to 70 or 65? So if your mom or dad developed cancer in their 70s and 80s, it may not be an issue for you because that's just something that happens sometimes when people get older. So the insurance company may look at that and say, we'll offer insurance for this individual who's 30 now because that's so far out in the future, it may not be a risk now. That's not in every case, but that is something to consider. So those are basically the three things that an underwriter will take a look at. So what's your lifestyle like? Do you have a healthy lifestyle? What's your financial situation like? Are you a good financial risk? And what's your actual health like? Are you someone who is healthy? And if not, what are the impacts for the insurance company? Now, if any of these, if all three of these things are good, perfect, you'll probably get insurance issued at a standard rate. If any of them have a particular concern, the decision may be to issue the life insurance with a rating. That is, you're deemed to be a higher risk, so the premiums are higher, or it may be an exclusion, so that they'll issue you a policy, but if you die or contract a disease or illness in a specific area, it may not be covered. A good example of that in the lifestyle is if you are a student pilot or a private pilot, you may be issued life insurance for every that covers you for everything except if you die in a plane crash, because that is a higher risk. So many people who are pilots, and I have clients like this, they're aware that if they die in the plane, then the insurance isn't covered. So I hope that is helpful, provides a little bit of enlightenment on the mysteries that go on in the underwriting world. If you do have any questions, please let me know. And if this is something that you've been thinking about applying for insurance, but you were concerned about one of these three areas, I hope that that has helped. And you can always reach me for questions. That's Mike Riley with Freedom 55 Financial, helping you gain altitude and gain confidence.